Good morning and welcome back to the Opportunistic Trader for the month end, November 30. Very happy month end to everybody. Somehow the market spent 18 trading days of the month down, and in 2 trading days it ripped 60 handles and is now up a grand whopping total of 15 or 20 handles. So all is good. I walked in this morning. Markets around the world in Asia were slightly higher. In Europe, lower. DAX actually was about 130 points from the month low, and the S&P is 130 handles, or actually it's 100 handles from the month low. So again, divergence there. We're the best house on a bad block. I've heard that for 5 years, but anyway, that's the mantra we're going with. So Europe is down. They're going to close down on the month. We're right now up. We're going to close up on the month unless something happens. We expect it to be on the lighter side today. Everybody getting ready for the big G20 meeting that they've already done a deal, but they're not releasing. Here's the thing I want to ask you guys this morning. I'm a little hyped up, but I somehow heard that if we fully tariff everything at 25%, every item, do you know how much it is per year that we're doing in business, or China's doing in business with the U.S.? I was shocked to see how low that number was. Do you guys have an idea? I could be wrong on this number, but I think I'm not. Mike, you have an idea?
I don't. I'm waiting to hear.
500 billion. Okay, so 500 billion is 100 billion basically in total tariffs at the max. What I don't understand is how that's crushing somebody. I mean, the numbers, are small. So if you take that number and take it down to 10%, you're looking at like 50 billion in tariffs or less that China has paid so far extra. Is that really market relevant? I may be off on this, and I need somebody to really look into it, but I'm telling you that these numbers are small, and this is a Trump ploy, to make it like he's doing something huge. And, that to me is the biggest point here, is that it's no money. It's really not a lot of money. And he's just bullying these guys, or every country. Again, like European cars. How much do you think we've got to find this today? How much is the total of European cars into the U.S. in gross dollars?
Before you get this question, Larry, I'm on that. I will get that information.
Okay, so I want to know that exactly, because somebody said this morning it's like 500 billion in total that they're doing with us a year. So you're talking about no money. European cars, yeah, it sounds terrible, but I don't know how many European cars are sold in the U.S. in billions of dollars. I mean, what's the average price of a European car that sells in the U.S.? 40 grand? 50 grand? I mean, that's a lot of cars. A lot of cars. So these numbers are not that big, and they're certainly for our economy. When you look at the trade deficit and our debt, it's not that big a deal. So they're putting such an emphasis. I think it's really more a point of emphasis than the actual dollars. And Trump, thinks it's like the biggest thing in the world. It's kind of like the Saudi thing. He's running around saying that they're doing so much business with us. They're a tiny country. They're doing business with us, but it's not crazy market impactful, other than the hotels and everything else that he's building with them. As partners, that's really more where it hits home. But as a country and as a nation, I don't see it. So this, to me, and this may last another year, could last longer. I don't know, but it reminds me a lot of all of the stuff that the market has gone past, from Greek debt defaults to European debt defaults to this being the biggest thing and that being the biggest thing. And the truth is, we're going to do a deal, whatever it is, and Trump's going to say it's a great deal. Now we want to back up to something else. What's going on in North Korea? Okay, let's just look at that for a second. Okay, we were all over that, and we were going to do this and that. They haven't had one meeting since that last meeting.
That's right.
A year and change ago, and nobody cares. Nobody cares.
Exactly.
In about a month, nobody's going to care about the reporter that was killed, Khashoggi. They're not going to care. I mean, it's an amazing market. It's an amazing, I guess it's the world. It's just whatever the flavor of the month is. But to me, they're making this China thing, which is big, don't get me wrong, but in a notional dollar way, I don't think it's that big. I don't think it's going to change. If we tax them at 25%, it's not changing our economy. It's not doing anything.
Well,
so
I'm starting to look it up now, Larry, and obviously you're hitting on 2 points. One is what's the monetary value to us in this trade war, and two is the fact that the news cycle changes every 5 minutes. I just want to draw, Mike, if you want to put it on the screen, I just put a picture in who's making money based on the trade war right now, and I put a picture in the on the screen of revenues from the tariffs, and look at the difference between China and us from the current tariffs as levied, which is relevant to your point of the lack of financial difference it makes for us. It's anyway. I didn't mean to get you off, but
I really want to know the number, because the number to me can't be that big. It just cannot be that big. Even at 25%, it's not that big. It's not market. It's not economy moving. Okay.
Well, on a few of these points, the significance of it though is jobs and down the road. Like for instance,
right.
GM closing a plant that has 15,000 workers because they can make something in a different area at a better price.
I understand, but then you're hurting your own business. You're basically telling GM don't pay.
Lose,
right.
10,
but what we're saying is,
part is that, like for instance, I even saw yesterday, I believe Calvin Klein is saying if this goes to 25%, they're going to be raising prices. They can no longer pass. They're going to have to start passing the price on
Mike,
the consumer.
but that's hurting our country. What I'm saying is his tariffs are really not hurting. Like, we were manufacturing goods in China. It would hurt us. It's not hurting China. I mean, we're making the goods, and we're paying the 25% tariff. Calvin Klein is paying the 25% tariff. What Trump is trying to do, in my mind, is he's trying to get jobs back to, first of all, maybe I'm wrong, the job market is the tightest it's ever been, almost ever. So what is he so concerned with jobs in the U.S. if the unemployment is at 3 point whatever percent, which is lows in history? So, I get it if the economy was doing bad and all of that. What's going to happen here? Listen, in China, they're paying, I don't know the numbers, I'm making it up, but $3 an hour. We're paying $12 an hour, $8 an hour. How can a business sustain if their cost of labor goes up double? So nothing is going to change that. And the truth is, people are angry and frustrated about it, and it's really hurting U.S. companies.
Well, here's a real number for you right away. All right, and it comes from Tracy. In 2017, the U.S. shipped 53.6 billion worth of cars to its trade partners. American revenues from exported cars are far less than a third of the 179.6 billion that the U.S. spent on imported cars. So basically, we're making, and we don't make and sell anything anymore. So I mean, that's a generalization, but we spend 3 times as much as we.
What was the number of European cars bought by the U.S.?
Well,
does it have it or no?
In monetary terms, in money terms, it's 179.6 billion dollars that U.S. consumers spent on imported cars. Now, I don't know if that's just Europe, but I do know it's imported cars in total, I believe.
But that's what we're paying. So I don't know what they're charging, like BMW to sell it. So even if it's 180,
to your point,
even if it's 180 billion, and they tax it 10%.
Right.
Okay, what are you talking about? 18 billion?
We're talking about, and we're also talking about, as Mike was saying, American consumers that are on the margin can't buy the car they want to, and second, we lose jobs. So if we make 550 billion a year in tariffs, we lose.
No, we're not making 500. We're not making 550 billion. That's the gross number of what they're selling out of China that's not being tariffed. What I'm trying to tell you is if you look at 180 billion in autos coming from Europe, I get the gross effect. It obviously affects everybody. But what I'm saying is Trump's money world, what's he getting? 18 billion?
He's getting reelected.
16 billion? I mean, it's no money.
Americans are getting unemployed.
And when there's bad news in the market, it loses $500 billion in a day, and you're talking about $18 billion in gross revenue. So I think, Trump doesn't really have much going on, so he has to go after these guys, and he's going to keep playing it. But the truth is, when they do a China deal, whenever that is, probably this weekend, is that really bullish? Like, what's so bullish about it? So they're going to pay us, let's say he gets a 7% tax on the 500. What is that, $35 billion?
It's bullish for the stock market.
Jeff Bezos makes and loses more than that every single day in his stock price.
What I'm getting at is it's bullish for the stock market, not bullish for the economy.
But why is it? But what I'm saying is why I get it's bullish because it's bad news.
For the economy. I'm agreeing with you. Stocks will go up, but the stock market does not reflect.
But why would what I'm saying to you is why stocks never really went down?
Because the stock market is forward-looking, and the forward-looking market is priced in turbulence ahead, uncertainty ahead, more trade spats between U.S., China. Trump all of a sudden starts. Tomorrow he's going to tariff another potentially.
I understand, but for China,
emerging markets have underperformed this year based on the fact of uncertainty globally.
Okay, so let me ask you this:
so if they make a deal,
there weren't tariffs 3 years ago, were there? They didn't. Before Trump was in, there were no tariffs, and the market was way lower than this. Okay, so now they take the tariffs off, or they get it out of the way, but it makes the market so much more valuable. Then it never went down.
Uncertainty is why
I know, Mike, but the market never went down. The market is up on the year. They're doing 10% tariffs right now, and they're going to 25. But if they don't do that and they do a deal which will be at least 10% tariffs, why is that bullish? I'm just saying. Okay. I'm saying the market will perceive it as bullish, but what is so bullish about it? I mean, and I'll tell you a better one. 2 months from the time they sign the deal, no one's going to even be talking about it. It'll be off the table like the Greek debt. And how long have we been dealing with Brexit? It's been 2 years.
Well, on to more of the markets like exactly what we're talking about. Right now, the straddle has for Monday pricing at 48. Remember when we were going over healthcare and is the House going to vote it in? Is it not? Remember, like the S&P would sell off 30 points and come back based on, and that was the flavor of the day,
Right, but that's what all I'm pointing out to our membership and our viewers is that these things are all what I call fake news. Like you said, the next thing is the government shutdown. Is Trump going to shut the government? Is he going to build a wall? I mean, and the funny thing is every mantra, and maybe I'm wrong, but every mantra is bullish. So before he talked about XYZ, shutting the government, the market is at 27.37. Okay, they're going to shut the government. The market's still at 27.37. Then when they don't shut the government, it goes up to 27.57. So it's very. All I'm saying is it's very strange, the market action, how it's always bullish, and all of these event risks. Which this is another one. There's a 90, and I'm going on record. There's a 90% chance, 90, that they do something that the market perceives as positive. 90, okay? They're either going to sign a deal, they're going to delay the tariffs till, the spring, they're going to do more talking. Listen, that 90% a day later is off the table. We might drop 50 handles because, whatever. But right now, I mean, how do you see, this is an interesting question to you guys. How do you see the thing going at, like, what's the negative? Tell me the negative from your guys' thought. Obviously, the obvious negative is if they, break out in a brawl and, which is not going to happen, and they walk out with nothing. But what? Tell me a
The
negative.
negative is that Trump walks away from the meeting and says China is not doing enough. We're going forward with the 25% tariff starting Jan 1. Boom.
Okay, so that's it.
That's
There's
the
one
negative.
scenario, but there's 27 scenarios that are bullish.
The most likely is what actually. So we were trading lower overnight. We traded down to 27.30, which is where he took profit, which was a nice trade there.
Thank you very much.
And
I'll
then-
take credit for
but-
that.
So just before we came on, Lighthizer, who's been more hawkish on the whole China trade, he said Lighthizer says if it would surprise him if the China dinner fails, but then he also says that. No prediction on a possible deal, but he's expecting, as he said, he's not expecting it to fail. He's expecting some sort of constructive dialogue. I think that's the more base case, is the constructive dialogue where
But
they walk away and they say, hey, we're working. Maybe the next so that I think would be slightly positive for the markets. The next better thing would be Trump actually saying we're not going to tariff them the additional on January 1.
Oh,
we're
that's
going to work together.
Listen to me. All of those
That's
things.
positive if he takes that off the table.
But what I'm saying is, it never came on the table yet. I'm not
What do you mean it's
debating
not on
it.
the
It's
table?
not on the table. The 25 has not hit the market yet.
No, Jan
So-
1 is hitting the market.
Right, I understand that. But okay, so if they push it back to March, it never hit anyway. It's never been in the trade. That's all I'm saying to you is I can come up with 9 positives and only 1 negative.
Agreed.
No matter what. Oh, we're meeting later. We're set. Trump's going to come out. Literally, they might actually do like a man hug or something. They're going to come out best friends.
Well, him and
you know.
Macron,
But we
hand
all
on
agree
knee.
that the market doesn't reflect reality. How do we
No,
trade today?
100%. But what I'm saying to you, and maybe I'm wrong, is there's a 90% chance that nothing bad can happen, because they're never going to walk out of this meeting and say, we're not talking again. They're going to come out. If they can't get anything done, they'll be like, okay, we're meeting later in the spring. There's a summit in whatever. And the market will think that's positive. If they walk out with a positive, constructive framework, I'm using the word framework because that's that they keep using, framework for a deal, that's positive. Okay. If there's only one negative, and the one negative is that we're going to go forward with the tariffs. We're not talking. We don't have anything planned, moving forward. That's the negative. Other than that, there's 19 positives.
But I got to say, Tracy just posted something probably a minute or two ago that's a great chart, and it answers some of our questions here. They've implemented the equivalent of about, I believe that's $250 billion worth of tariffs, whereas they are proposing almost $1 trillion worth of tariffs. So implemented a tiny amount. Proposed is somewhere just below $1 trillion. So,
Right.
To China itself?
Yeah.
What I'm asking is, what is the actual amount of goods that are shipped in to the U.S. in a year? Is it $1 trillion? I think that's high.
That's what it is. It's like 900 billion. I'm looking at this chart.
Okay, so it's 900 billion, but even in 900 billion, you're talking about $100 billion, 100 and change billion dollars. It's not. I'm telling you, that's not market changing. That's not even a day's up or down in the value of the stock market. All I'm telling you is it's more of a talking point than anything.
Dude, I don't
else.
think anyone's arguing with you at all.
No, I know, but I agree. It's just I'm passionate about it because I don't think
let's go over
it's
to the actual price action of things, where we have the straddle for today is about $15, whereas the straddle for Monday is about $48.
I don't think the straddle for Monday is all that low. We've seen straddles over the last month that have been $40 that basically, when we're at a 23 volatility, the straddle's $48. So yes, it is high, definitely. I don't see how we move 50 handles.
So tell me,
I could be
what's
wrong.
the trade though? Is it selling VIX and selling S&P? Is it
No, that won't work well. I would think that selling, let's say the 35 straddle right now is, here's an interesting trade to look at. The 35 straddle is $48. Around that, you could buy a wing. Okay, the 35 straddle, go down to like even, You pay $11 for that, okay? And then the upside I'm not as worried about, so I'd give myself a little bit more room, and I go to, let's say, 2,800 for. So around the straddle, you're paying $15, okay? So you're getting 48, you're paying 15, right? So you have $33 in that trade. Now, on the downside, you're protected at even, correct? So the most you can lose is $35 on that, plus the premium. But the premium is added in, so $35. The most you're going to lose if that goes in the money is 2, okay? And on the upside, you're going to lose more, but I'm not as worried about the upside. You're capped in here where you can only lose maybe 10 points to make 33. I think it's a pretty good trade.
So what?
But
can
you
you explain exactly, once again, so you're saying sell the straddle at 48,
right,
and then potentially buy the 20.
Buy the wings. You're buying the 35 put at 11. So that takes down your price from 48.
No, not the 35 put.
The even puts.
Even put, okay.
To basically lose $35 down, okay? So if you take the $11 out of the 48, it brings you to $37. So on the downside, you're pretty covered, and you buy an upside call.
You're looking at 2,800 call?
Yeah, or even you could go down to the 90 call. Listen, you'll lose money on the upside because you have 65 to lose, not 35. So you can lose $30. You're gonna risk maybe on the upside $30, on the downside basically almost capped, and you have a potential profit of 33 points. You'll have to sit all day.
So as a trade for beginners, I want to just break this.
This is, listen, the truth is this is not a beginner trade in the sense that, there's too many moving parts. This is, beginner's trade is, you're going to buy
covered. You're basically saying sell the straddle and buy 2 wings.
Right, so absolutely. But a beginner, I think, would look at selling a call spread or selling a put spread, or.
But that's what you're doing. You're doing both.
Right, you're doing both. Exactly. You're selling the call spread and you're selling the put spread. And you're selling the call spread and you're selling the put spread. And on the call spread, you're selling you have a $65 cap, okay? And on the put spread, you have a $35 cap, okay? So on the put side, the most you're going to really lose is $3. On the call side, you could lose $30. And I think it's a pretty good risk reward trade. If nothing happens, you're going to take in a lot of premium. But again, it's not, it's not for the faint of heart. You're going to have to maneuver around these positions. But overall, that's something to look at. I just, listen, maybe I'm wrong, and I'm going out on the limb. There's a 90% chance of bullish. Now, listen, that 10% chance could come in. Some people, I met a gentleman in my office, and I'm not going to name names, and all he does every month is buy out of the money puts in size, hoping that the market crashes. So everybody has their own strategy. For me, looking at it, I don't see. I don't know. Maybe I'm off. I just don't see how it's a walk away this weekend. They're not going to walk away from each other. There's just no way. Now, listen, a week from then, they will. They might never. It might be a North Korea thing, where it goes a year. I'd like to.
The government shutdown will be in the headline by then, Lara, as you were saying.
Oh, there's a lot of. Listen, he'll have 50 headlines, and then it brings us to the next thing. Mueller, where is this guy? I say it to Mike every day. It's like the guy has a year and 10 months left in his presidency. What is it? What are they going to get him on the way out the door? They're going to wait another year?
Larry's been asking about this consistently every day for like a year and a half. No,
I mean, where is the guy? He goes to work every day. He sits in a little room with a box of papers, and he's trying to figure it out. I mean, either it's blatant right there in the open, okay? There's no secrets here. I mean, did he meet with the Russians in Trump Tower, okay? Did he meet with the Russians that day, okay? You know his son did. Was Trump there or not? I mean, they can't figure that out. It's taking them 2 years. It's absolutely bizarre, you know? So another week has gone by, and the guy is still waiting. What's he going to do? He takes the summer off, so nothing's going to happen for like 3 months. So we're down to a year in the guy's presidency. What do they care? Like, leave him alone. Let him just get out. This is the craziest thing ever.
As much fun as this conversation is, I want to present something to both Larry and Vince here. There's an article in the Wall Street Journal. I'm going to put some information in the chat in a minute. But Jack Bogle, who is known as the father of index funds, points out that right now, 18% of all U.S. equities are bought by index funds. And he's saying that basically in a very short time, it'll be 50%, which is ultimately getting to the point where there's kind of what we've been talking about, lack of trading and people just piling into index funds. And he's actually saying this is very, very dangerous. Whereas in 2000, it was about 2%. Right now, it's about 18%.
Oh, it's going to go up much, much higher because the day of the stock picker is gone, and the bottom line is there's just nothing out there to think about. So if you buy S&P, you're either up or down. What the S&P is down. You don't want to buy GE on a year like this because you're going to be down 50%. You'd rather just, index. Everybody's passive indexed. I don't want to get into what that means for the market, but overall, it's just crazy. But the divergences are nuts. I'm just happy the market sold off this morning. We were able to cover. We made some money, and we're on to the next.
Take a look. I just posted the chart in the chat. So it basically says in 1988, there was about 0 in index funds. In 2000, it was like 3%. And this has just been a parabolic move up. Vince, what are your thoughts on that and what that means for trading? Because it just seems like people in general, the public is just forgetting about trying to find alpha. They're just piling into index funds. And so, like Larry was saying, it's less stock picking.
That's okay. For investors, it's systemically dangerous because investment, the way I define it, is something you have to own for 3 to 10 years. So the passive aspect of investment, which is what they're talking about with indexing, it's going to create less market risk and more systemic risk, meaning when it craps out, it's going to crap out the most. For people like us that trade short term, it's better, and by that I mean it's kind of like if you're well, it's not like anything. It is. If people are going to buy, it's actually, the concept is called flow versus inventory, or flow versus stock in trading. You're trading order flow, and all the order flow is passively buying. Then you can trade around it. You can surf the wave and get in front of it. It's much better, I think, for short-term traders than it was, say, 7 years ago. We're heading into a really good environment for short-term traders, and that's why, not to take anything away from Larry's skills, but the opportunities have been there, and that's why short-term traders like Larry can benefit from that because of the passivity and the automation. And I mean that in every sense of the word, whether it be an algo or the fact that a 401k just has to plow money into stock passively. That's better for us because we have powder dry. We're going to be able to, we can talk for an hour about it, and we'll talk for an hour about it every day about this makes no sense. I don't know why we keep going higher, but you know what? As soon as we hang up this phone, we're all going to make money knowing that it doesn't make sense and not caring about it because we trade around it short term. I think really short duration trading is where it's going to be at for the next 5 years, or macro bets that you can really sit on your hands for 5 years on. And put it this way, it's going to become time to be a market maker again, I think, because of all the passive investing, which is which is passive investing being competed with by algos front running it, human traders can now turn around their money and capital a lot quicker. I mean, that's a convoluted answer, but I think systemically the market has big risk to the downside. But every leg, higher or lower, we can make money now. It's not.
Well, there's more volatility and better trading, but I wanna shift because we were off on a bunch of rants today, which have been really, really fun, and I'm hyped up today. I must have had like a triple shot in my cappuccino this morning because I'm actually feeling awake. Usually I'm half asleep in here, but I wanted to quickly, since we're closing in on month end, I wanted to quickly go over like some market performance, which is sort of outside the box. And obviously this month natural gas was the big performer. I want to quickly just broach all of these different things. So natural gas was the big performer for the week, for the month, and it's up 30-ish percent.
41% right now, month to date.
Okay. Mike's got all the stats, so I'm just going off the cuff of where I think we open and where we close.
What do you think crude is for the month?
Crude is down, I would say 23% for the month.
Whoa, not bad off the cuff. 22.5 right here.
Holy cow, that's pretty good guess. Another market I wanted to just quickly discuss is the bond market, because that's thrown a wrench into pretty much everybody's thinking. Everybody thought rates were going higher, and they really went lower, and bonds 10 years are probably approaching 3%. So I think that fooled everybody this month. So that's been an interesting one. Volatility as well, gold as well. Markets have moved in here. A lot of markets have moved. S&P plus or minus 2% inside that range pretty much all month. The S&P, where did it start? 15 or 10? I forgot what you told me. 11. Okay, so the S&P's up 1% for the month coming in here. It was down 2% for the month coming into the week. So we've had a monster week off of the fact that Powell basically got broken by Trump and changed his whole interest rate policy.
It's pretty interesting. Emerging markets, EEM is having a great month, up 4.5%. FXI is up 6%. So those have really had a standout month, especially when you're taking a look at. We were pointing out before that the DAX is pretty close to the low right now.
No, listen, I'm going out on the limb again, like I went out on my 90% chance bullish for this meeting this weekend. I think the best trade now is to be long Asia. I would be even ex-Japan. So Hong Kong and mainland China are the longs in my book. And it's funny, if they get a deal of some consequence, I think China could be up 10% in a day, 8 to 10. I'm not saying that that's going to happen, but there's an outside chance of a full-out deal. That market will just explode. So got to keep an eye on that. But, I just wanted to touch briefly on these markets. Gold is, it's always in the same spot. So, you gotta, I don't know what that's moved this month, but it probably isn't all that much. What did gold do for the month?
Up 0.9%.
Right. So it's 0. Vince, you with us?
Sounds like Vince dropped off.
Vince! We talked about gold and he's gone.
Oh, I'm sorry.
Whoa, where were you?
All right.
We were talking about you. Did you leave?
It's the flu.
No,
you got called out.
My dog put it on mute, okay? My dog did it. I actually wanted to comment on your Asia comment, your Asian stock comment. China is definitely slowing down economically. Hear me out. China is definitely slowing down. And regardless of what happens with this trade war thing, the Asian economies, again, like you said, sans Japan or ex-Japan, are definitely slowing down. And that's why Asian stocks are starting to move higher today, because now they're going to ease policies there. Their cycle is definitely at a lower low than ours is. And it might really be a time to buy Asian stocks. I really agree with you on that. And You guys are just haters of gold. You'll all be calling me.
I'm not a
You'll all be
hater of
calling me
gold.
in 6 months.
I've
or
traded
20
it.
years,
I
I'm
haven't
not
traded
sure.
in a while, but I've traded it. It's not exciting. But
It's not exciting. I'm just making a joke.
yeah,
I'm making a joke.
anyway, before we get going here, we talked about it yesterday. It actually worked out well. Volatility in the last 2 days is up over 10%. It's actually up again today. It's come in a little. I feel like it's a buy all the way up to the close tonight. You don't want to take it home, but all the way up to the close tonight. Vol should, depending on the market, go out on the highs. People need protection. They could blow their whole year in one night, potentially. So people are going to be buying out of the money puts and all of that. Overall, though, we expect it to be extremely quiet today. I'm hoping we get 10 and 15 handle swings, but unless there's fake news.
Lighthizer comments, things like that.
Right, fake
There's
news.
definitely going to be some comments.
But yesterday was interesting, and one thing I'm picking up off these algorithms, which is important for our community to see, is when the fake news comes out or whatever the headline news, like I always turn to Mike and I'm like, there's got to be news, and he goes and he's looking, and we finally find it probably a minute and a half after any algorithm. But that being said, the market in the direction that it's going, 5 minutes after the fake headline either takes out the high or low of that move. So it actually reverses almost the whole new move off the fake news and makes a new high or low. So it creates more longs or more shorts being forced in, and then it takes out the other side. So you as a trader, you got to be careful of that, because you don't want to get caught. And most of these news headlines, I'd say 99% are fake. Like yesterday, Trump came out. They want to do a deal with us, or we want to do a deal, and then 2 minutes later, he's like, "But we don't want to do the deal," or something. So,
sounds a little bit low, Larry. I don't think it's me this time.
think about this, and then we'll wrap it up. But think about Donald Trump being as power hungry as he is, okay, and egomaniac as he is. Think about the power so he's going to sleep tonight, okay, and he's waking up in the morning. He's like, I have a dinner with this guy, and literally I'm in control of the fate of basically the stock market. If I walk out of this meeting and basically signal that we're walking away, I could send the market down 10% in a day. That's got to, for a guy like that, that's got to be just awesome.
He doesn't want to do that.
Why?
That's his scorecard. Biggest thing, he comes out, the S&P
But his score,
X and
Mike,
X since I've been elected.
This is what I'd like to do. So we've answered, and Tracy, I appreciate everything, but I'd like to know this, and maybe our crack statisticians in here can figure this out. I would like to know on a year-over-year basis, and I know Obama's probably the best, year-over-year in a presidency, percentage per year that we're up. Okay, and let's just hypothetically say this year we're flat and last year we were up 22. Okay, so what's the guy up? He's up 11 or 12. This is not like an extreme bull market like Obama had.
Hold on. Larry?
Yes, sir.
Okay, I want to answer that question, because I actually have the answer to that, and I want to. One of our subscribers has a question for you. I want to get in.
Well, before you do that, okay.
Okay.
I'm expecting a down year next year. Okay, so let's say we happen to have a down year and it's down 2, 5, 10, 15. You're going to be done with year 3 of his presidency, and potentially the market over 3 years will be up less than 10 to 15%. That's horrible relative. So they're saying he's the market president. He's the nothing. I mean, we're going up, don't get me wrong, but we're not exploding under him. And he's done so many crazy things to put the country in jeopardy moving forward that, if next year is a down year, let's say he's up cumulatively at the end of this year 24%. Let's say next year we're down 5. We'll give him benefit of the doubt. We're now 19 over 3. You're talking about a guy that's up 6% in his presidency. How is that defining anybody? I mean, what were we up under Reagan? Give me the numbers, Vince, because I'm curious.
I don't have the number today. I do want to focus on what the subscriber
You just said you had the number.
700. Okay, 700 days into Obama's presidency and 700 days into Trump's presidency, which is what we're past now. but 700 days into both presidencies, the stock market was up about X% for both of them. It was up the same. There was no difference between them. Now the stock market is down. So Obama had outperformed. And I'll check my data on that later.
Listen, I know he's never going to outperform Obama. I don't think he's going to outperform Reagan, and I don't think, and I don't think he'll outperform Clinton. But I'm saying, but Mike's saying he's defined by the stock market. So if he's defined by the stock market, in recent memory, he's not even in the top
he's got a
three.
He's got Powell. He's scapegoating Powell. XDM asks you a question about yesterday's trade. You bought at 27.30, right? And you took profits today, but your stop was 27.55. Now, did you have a methodology in determining the stop, or was it based on?
It was actually luck, because I think the high was what, 4.5. So the high was 4.5. No, I had no methodology other than the fact that we had a couple of winning trades, so it let me stay in the trade a little bit longer. But as you notice, like for me,
so you parlayed a little bit too, right?
Well, I had positive profit, which is something that we teach. Utilizing sizing and risk parameters basis how you're doing.
Right.
So the bottom line is, and you'll see this a lot. Many people out there, their risk reward parameters are a little bit different. People are like risking 5 to make 15. I'm not like that. My risk reward is almost skewed negatively because I make so many trades and I usually don't get stopped out.
Well,
So
your edge isn't in your risk reward of capital at risk. Your edge is in you feel the asymmetry of the market move,
Right.
Which is what I
right, and the stop is almost
before.
an up and out. It's
Right.
me saying, hey, this is just as much pain as I can take. But the truth on this is that if you have positive P&L for the month, it makes you much different than if you have negative. Negative, then you got to use really tight stops on both sides of the market, and you can't keep losing. So that's why I did that. I got lucky that I picked that level and we didn't get stopped out, and we ended up taking over 10 points out of the trade. The stop was a $14 stop, so really risk reward was symmetric on that trade.
Yeah, I hear you.
But overall, that's sort of that's sort of the story. But I want to, we're getting close to the opening. It's 9:15. I really enjoyed it today. I'm fired up. And I appreciate both you guys being on. Today we're going to have myself on, as well as Mark Fisher, and it's going to be quiet overall. It's going to hopefully be busy in our chat with ideas. But again, on the equity front, I would highly recommend, unless you're using options, and Tommy Mac and you can really go over this and put like trades on like this where your risk reward is fairly defined. But I wouldn't take a position into this weekend. But I don't like to say gun to the head, but if you put a gun to someone's head,
right?
What way would you go?
You don't.
my inkling is 90% that they'll be positive this weekend.
Right.
I don't think it'll last,
saying, would you
but
be a buyer or seller of the straddle?
there's no way they're gonna have this dinner, walk out, and have a blown up deal. Now they might push it back, the tariffs. I don't know why coming out of it and pushing it back is so bullish, but somehow it is. But we're looking at it and we feel like there's 90% bullish.
Yeah. Subscriber TA made a comment. I think that echoes what you're saying. He said it seems like Trump might kick the 25% tariff hike down the road again, like he did last time, and he'll just stay at 10%. 27.50 is middle of the road. Staying away from the market today is probably a good idea. But if you had to do something, maybe selling an iron butterfly, which is selling a call spread and a put spread, is something to consider if you understand the risk of that, by the way.
Okay. Anyway, so that's the schedule. That's our thoughts today. I think we're gonna. I'm looking for trades, but in what I do, it doesn't look like there'll be much. What do we look like for the month, Mike, as far as trades? I think it's not a great month for us.
Like 17 wins, 14 losses.
Yeah,
and
quiet.
Played,
we got off to a bad start. We were trying to be extra careful. We didn't have a lot of trades this month. We ended a little over 50%. It's our worst month. so far, but we'll take it, and I hope people are doing well, and we're teaching and showing people good ideas. That's our game plan in here, and I think the people that are working with us are excellent, and I'm very, very happy with the subscriber experience that I'm hearing from people in the chat. Anyway, I'm talking too much today, so I'm done. I wish everybody good luck, and we'll be back to you in the chat.